All right, so I actually realized when we finished part one, setup one on the first pullback, that I actually had a couple slides I missed because I had added them before. Anyways, it's the way Google Slides work. So I have a couple slides that I missed, and I have one more live trading archive example that I want to show you of the first pullback. So let's first just look here. This is a great example on AUVI. This one I actually added yesterday. Start squeezing up pre-market. You can see that green candle as it's surging up. This is our 5-minute chart. We've got the 1 minute here. First 1 minute pullback was right here. It rips higher. The second 1 minute pullback right there works, and it continues higher yet again. So the first two 1 minute pullbacks worked really well as the 5-minute candle was surging up. Now we have another instance here, AREC. The 5-minute is a bull flag. The 1 minute, you can see how first 1 minute candle to make a new high here came back up, but it went a little higher, but then it pulled back. Then it sort of did it again, but in this scenario, can you think about why I would usually be hesitant taking that first candle to make a new high? The answer is because now it's kind of going sideways. And like on the example of AUVI, it's clearly going up. It pulls back, it goes higher, it pulls back. It's still well above the previous breakout point. When you have a situation like this where it pulls back, it pops up, it goes right back to the same price, and then pops up, we're in a channel. We're trading sideways. And I usually don't like to trade things that are in that sideways channel all that much. And in fact, this is forming this consolidation. Yes, we've got this ascending kind of support coming up below it. It's at the 9 moving average on the 1 minute. The 5 minutes a little extended off the 9, but it's above the VWAP. First 5-minute candle to make a new high, breakout. And what usually happens after the first 5-minute candle makes a new high and we get that breakout? The first 1 minute pullback usually gets bought up. And that's exactly what happened right here. And that's because of all the traders out there that weren't watching this stock, but then it starts hitting their high day momentum scanners right through here. And some of them might just pile on and jump on as it rips up. But others, cool, calm, and collected, wait for the first pullback. And so that first dip usually gets bought up pretty nicely. And in this case, it did. And then it surges higher. And that's what we look for in the gap and go setup when we're trading the first pullback setup. We look for that first pullback and we look for the second. And then when we get into sort of the third and the fourth and the fifth, and we're starting to get higher and higher, that's where we start to have to downsize. Now, I'll show you an example from today. I don't want to get too caught up in. I don't want to be live trading while we're going through this because these are very specific examples. But I'll just show you the charts of one from today. But while that loads, this live example I showed you buying the first bull flag, and this one I did not show you, even though it was right up on the screen. I don't know, I got confused. So this is going to be that setup right here. So let's watch this. All right, so let's see. I'm gonna hide this. All right, so we're watching the 1 minute chart, and this actually. Now I'm confused about what I'm looking at here. Hold on. Gap and go, break a bull flag. Oh, okay. So actually, this was, now I understand what I'm looking at. Okay, so what we had here was a bull flag on the 1 minute, which was formed pre-market. So we had this 1 minute pullback pre-market. The first 1 minute candle to make a new high was actually when the bell rang. So it was right there. All right, so let's watch this. So EC, we've got 3 seconds to the bell rings here. 2, 1, boom, there's the bell. Notice order entry window. It's already loaded at 425 for an order for 2,000 shares. All I have to do is click the buy button and my mouse is right there. And I can get my drawing tool up here so we can just show this to you. All right, so this is the spot right here. We've got the 13,000 share seller, another 10,000 share seller. So a couple sellers stacked up. The bell rings. I buy the dip right there, and I'm filling at 410. And I'm looking for that first 1 minute candle to make a new high right here. And this also is sort of a bounce off the VWAP. This is a little unusual that the trade occurs where, I mean, I guess it's not totally unusual. It just happened to be the case on this trade where those 4 or so 1 minute candles, one, two, three, 4 of pullback, just had it set up where the first 1 minute candle to make a new high was the first candle of the day. And so I bought it and I have the average of 414. Now in terms of taking profit, if we look back at this trade, the entry was about 410 and the max loss was probably around 390, 395, just sort of below the low of day. So the bell rings, we have that sort of momentary imbalance, and then I decide to start buying with a stop at the low. I suspect that this was probably the leading gapper on that day, which is why I was pretty aggressive to get in it quick. Notice on the daily, we're above the 200 moving average right here. And I've drawn out some lines where we've got room to 423 and then 458. So there's 440. Now 450, I've got 8,000 shares. What I might do here is a quick add with a hotkey for the breakthrough right there, added at 50, hotkey shift 1 for the breakthrough, the $0.50. If we get the breakthrough, I'm going to take a little profit on the other side of that $0.50. If it can't hold and it comes right back down below the $0.50, you know, then I'll cut the rest off the table. But I'm taking half off right there, and my fill was 460, which is not bad. That definitely is the profit target. I mean, realistically on this from 415 just to 450 was good, but because it moved so quickly, I added thinking we may see a move higher. Now the halt level, LULD, is at 476. We're actually pretty darn close to that level. And now, as we approach it, right at this very moment, it looks like we may have a false halt. This may not actually halt. There's only one bid there. We don't have a bid stack. We just have one bid there at 73, and it's 1,000 shares. 76. Now we've got the bid stack. Just like that, we've got the bid stack. See how quick that all of a sudden starts to stack up? And that's where we feel, oh, but some people are selling, but then it stacks back up again. So, you know, this is where it's kind of that 15-second period of will it halt or will it not? And what we know is during that 15-second period, two things can happen. One, if the stock drops below 76 and goes back to 75 or anything lower, then if it comes back to 76, that 15-second timer starts again. So sometimes they'll be like this, they'll dip down for a second, they come back up, and then we've got the 15-second timer that starts again. The other thing that can happen is during this 15-second period, the average price of the last 5 minutes could update, and the halt level jumps higher. The average price, of course, since it's moved so fast, could update. Now, I don't actually know the time frame of how often they update. I haven't actually studied that at any point, but so right there, it did go ahead and halt, and now we're showing 76. And see, even though it's halted, the level 2 is jumping around. There's 80, and it's kind of weird that an order went through there. That's uncommon, but we're showing 85 and 77. So you have across level 2. $5, you saw 560 for a second. Now, hold up. Oh, okay. I just fast forwarded it. I was like, this is weird. I just fast forwarded it 5 minutes. Okay, so make it easy for the video. Okay, so we open high. Nice. Now we're looking for a dip and a trade over 5. So in this case, squeeze into the halt. We opened a little higher, looking for the dip. There's the long, adding right there, added at 489, anticipating the breakthrough the $0.50. And that would have been a micro pullback because it tapped 5, it then pulled back, and as it curled back up, I took the long. Now, there was a seller there at 10 on the breakthrough, a 10,000 share seller at 5, excuse me. It breaks through that level, and then it false breaks and comes back down. And that right there is why, that's a perfect example of why we often want to take profit right about here. And I put the order out at 509, actually 1 cent below the ask, but it doesn't fill. I get nothing filled. I put a new order at 508, nothing filled. Now, if I put a new order at 499, 2,700 shares fill, and now it's flushing back down. I have a new order at 88. So I keep trying to sell on the ask, but unfortunately, it's rejecting that level. So that's what we would call a rejection. And now at this point, if it breaks that $0.50, that's not good. Now in this case, I decided to add an average down. It brought my cost basis down to 66. I'm not really sure why I did that. I don't know. But what I really should have done was just sold the whole thing up there around 5. this is going to go from a winning trade to a losing trade. It comes right back down. See, and I check to see where I'm at, and I'm like, I'm going to give back all the gains I had. So if we go back to the beginning, the entry was the first 1 minute candle to make a new high. And I said I'd show you an example from today. So today we had this BPTH, which made a really kind of incredible move here, as you can see, up to $24 from 9. So this right here, this first 1 minute pullback, we needed one red candle. Well, it didn't have to be red, but we needed one candle that was sort of a candle of resting, a pullback candle. That was a great entry right there. And then the break pre-market over 1635, that was a good entry as well. You can see on the 1 minute how there was kind of this resistance at 1635. Let's refer to the 5 minute chart. Look at the 5 minute. The 5 minute shows us that the first 5 minute candle to make a new high right there was 1623 roughly, and 1635 was the high there. So we had that 5 minute setup that gave us that squeeze from 16 all the way up to 24. We were starting to set up another 5 minute setup right here, which I tried to trade and I lost on it. I am green. I'm up about 32,000 on the day, but I was up about 47 and then maybe 45 and then gave back 12,000 or so on that drop. So in any case, it's fine. But what I really wanted to show you was that first pullback there. Now, this is on the 1 minute chart. If we dial in on the 10-second chart and we go back to that same period of time, you will notice that there were some very micro pullbacks in this area. So the first proper pullback on the 1 minute chart was at 1475. And that was right here. That was the first proper pullback. But you had a small one here, and you had a small one here. So if you're willing to be more aggressive, and you're interested in being more aggressive, and you'll see that I often am, you can start trading these micro dips. These are micro pullbacks, and we'll talk about these a little bit more. But these are essentially micro pullbacks as it's moving higher. And this isn't exclusive to a gapper. You could trade this on any really strong stock. So that's a little micro pullback. And then as it squeezes higher here, this was sort of tricky price action because essentially it was just squeezing right to the halt level, and then the halt level moved up and it would jump higher. Then the halt level moved up again and it would jump higher, and then it flushes. Then it halts down, then it rips back up and halts up, then it opens lower, then it surges back up, pinned to the halt level. Halt level moves higher. Halt level moves higher. So actually, let's just look at this for 1 second, because this actually kind of gives us a timestamp of how often those halt levels were refreshing in a way, because we had several in a row. Maybe we're going to crack the code here today. All right, so let's back this up here, because this seems to have a bit of a pattern to it, doesn't it? Okay, so, all right, so between this window here, so it squeezes up to the halt level here, and then the halt level jumps up, and that time was, it looks like, let's zoom this in. Let's see, is it every 30 seconds, I'm wondering? So the high there was, well, it hit that halt level. It popped almost instantly. So right here at, it looks like 9:31 and 32 seconds, the halt level jumped up. And then it jumped up again there. It was about 30 seconds later. It was 9:32 and 4 seconds. And then here, it actually went for closer to 40 seconds. Let's see on this, in this section here. So it comes up to the halt level there, 57. Halt level jumps up at 27, 30 seconds. Halt level then jumps up here at 57, 30 seconds. Halt level then jumps up here at, so it seems like it's about every 30 seconds, which is I suppose makes sense. It's kind of maybe what I was thinking, but that seems like it pretty closely confirms it. So where that could be helpful to know is when we get into the class where we're talking about micro pullbacks and where we're talking about buying into halts, we're going to start to layer in that new knowledge that the halt level appear to update just about every 30 seconds at the top and the bottom of each minute. So as we're trading, we can be looking at the clock here and recognizing, okay, that halt level should update. Now, just to just to maybe add a little bit more clarity to it, let's look at BPTH, and let's go ahead and look at the halt level here, which is currently 1998, and our current time is 50. So I'm just looking at the current time. So here in this case, the halt level is still 1998, and the time you can see down here in the bottom corner. Now this is maybe not as volatile right now. Well, it's still pretty volatile. You would think it would be enough for it to move a couple cents. So let's see if at about the 30-second mark it changes. 1998, it's still 1998. And we're right there about the 30-second mark. So, hasn't changed. It's been more than almost a minute here. So let's see if as we come to the top of this next minute, if it changes. So we're at the top of the minute, and it has not changed. Well, we'll have to put a little bit more thought into that and study it a little bit more. I'm not totally sure. It could be different at different times of the day. It could be that they refresh faster in the morning and differently later. I'm not totally sure. We'll have to do some more research on it. But I think what we have learned at the least was that right at the open, when they're pinning at those halt levels, in those moments, it appears that they're updating just about every 30 seconds. So where that could be helpful is if we're looking at something about to get halted, and then we notice the time is the 30-second mark. Now, I'll tell you, I have never looked at it like that. I've been trading for a long time, and I've never, I haven't noticed that before. So you can certainly trade just fine without adding in that extra piece of information, but perhaps there's something there that could help us. So, all right, so let's close that down. We'll put that away. And that was what I wanted to add there. And we're going to continue on here now with Chapter 7, Setup 2. All right, everyone. So Chapter 7, Setup 2, the break of the pre-market highs. So sometimes when we're looking at the first pullback, it's possible that we miss that setup. There's also times where while the first pullback is happening, the volume is a little too light, or perhaps it does sort of a false breakout, or maybe there was a big seller on the ask. It does end up breaking, but you didn't take the trade. And so you missed that setup, or the setup wasn't good enough to take. And so what we kind of look at naturally is, what was the pre-market high of this stock? And I almost always mark out the pre-market highs. It's a logical level to mark out. It's a level that a lot of people will be watching. And usually when a stock breaks its pre-market highs, we do see some continuation through that level. And, even just today, again, as this example on BPTH, we had the pre-market high on this of 1703. We break through that level and we get an extension. Previously to that, we had a pre-market high of 1119. And it actually surged through that level strongly pre-market, but it was breaking the pre-market high. So the pre-market high, even though it's still pre-market, the pre-market high was 1119, and as it surged through that level, then we broke through that high, and then we had room certainly higher. So the break of a pre-market high is a fairly significant level. So this is the entry, and I'll move my camera here. I'll put it up here. The entry, and I'll have to fix that typo. Let me just pull up this slide here. Hopefully you guys have your notepads handy so you can be taking some notes as we go through this section. All right, so there we go. All right, so I enter based on the break of the pre-market high. If I take this trade pre-market, I'd still be buying based on the break of the current pre-market high, just like I just showed you on BPTH. It's essentially a high of day breakout setup. And I like buying stocks that are at their highs because they are really strong and they are the obvious stock in the market at that point. If they're the leading gapper and they are at the highs, they're going to be on pre-market scans, they're going to be at the top of a lot of top lists, and a lot of people are going to be watching them. Logically, if it breaks through the highs, anyone that is already short would typically use that as the place to stop out. And so that's where we could get that squeeze through that level. So it's that combination of It's a strong chart. It's the fact that it's hitting and breaking through the pre-market highs is indicative of strength. If the stock is one of our leading gappers, a lot of people will be watching it. So there's a lot of eyes on it. It's where short sellers are going to cover. It's where new long traders will come in as the stock is providing confirmation of its strength. And this fits within the buy high, sell higher attitude of many day traders. As with all momentum and gap and go strategies, if I feel strongly that the stock will break through the highs and or could make a large move higher, which would be based on my analysis of the float, which I would be able to pretty quickly recognize looking at the level 2 and the price action. So like BPTH here, it's a thinner level 2. It's got a bigger spread. There's not typically big stacks of buyers or sellers. It moves quickly. It's up 200% right now. But it was showing that same sort of early indicator of that potential pre-market. So if that's the case, based on float, previous rate of change, the former runner status, which BPTH is, the news, the current market conditions, we're in a pretty hot market, then I'll certainly try to anticipate the quick squeeze through the highs by taking an early entry. Now that entry may line up with a $0.50 or a whole dollar. So in the case of BPTH, its pre-market high was 11.19. Now in this case, I was actually a buyer under 10.50 for the first 5-minute candle to make a new high, and I was adding for the break of 11, knowing that if it surged through 11, we would almost definitely see 11.19. Short sellers would cover, more long traders would probably jump in, and as it breaks through the highs, now it's going to be on some pre-market scans of stocks hitting new highs right at that moment. Now, all in this area down here, as it was curling back up, it's not going to be on a high of day scanner. It's not at high of days. The high is way up here at 11.19. So down in this area, we see kind of a little bit, it's a little more lackluster. The volume is a little lighter. And then as it breaks through the highs, boom, 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 all of a sudden, it's going to start hitting those scanners. You know, Robinhood, all these different brokers out there, they're showing you stocks hitting new highs right now. Of course, they want to encourage you to be trading. That's their business model. Now, there it is, front and center. This is the stock ripping up. It's up 200%. It's the right price at $12, $13. People start jumping in, and boy, we got a nice move on this. So this entry down here, I definitely was anticipating the break through 11.19. I can understand as a beginner trader where sometimes anticipating entries can be a little bit confusing because you're kind of like, well, you know, where do I really, I don't know, where do I get in? How do I know that that's the right spot? So if we refer to the 5-minute chart on this just for a moment right here, this had popped up to a high of 53 and then double topped at about 53, 10.53. And that was right here. So we had come up to 53, which means we broke over the $0.50 and then came back below it. Then it sort of came back up here. It popped up to 10.38, sort of pulled back, and it felt like it was starting to curl back up. And I was watching 10.53. Now it actually pops up there to 10.53, to 10.50. It does a little micro pullback, as you can see right there. And that's where I said, you know what? I think it's going to go. I'm going to give it a stab with a smaller position. And actually, in this case, it ripped right up here. I added at 10.90. It did a micro pullback right here at 10.93. See, it hit 10.93. It dips down. It surges up. It pops right to the pre-market high of 11.20, 1 penny above it. It then dips down here, and then I added right here for the breakthrough 11.20. And now we're starting to move a little bit faster. Then we get the first kind of a little bit of a steeper pullback right here. Our high was 11.63. We get a pullback down to 11.20. It curls back up. I'm adding back right there. Now through this area, yes, I was adding. I was taking profit over 11, then adding back at 11.20, taking profit up here around 11.50, adding back at 11.45, taking profit now into this big squeeze up to 13. Hits a high of 13.05. We know how stocks above and below hold dollars. So it breaks above it, comes below it. I said if it can break 13.05, 13.10, then I'm going to be wanting to add back, and I did. So I take profit, then I add back right here. It rips higher up to 13.27, up to 13.40, 13.40. Little consolidation below the $0.50. It surges through that level, hits 14 on the ask, breaks 14, hits 14.10. I take some profit. It rejects that level, drops all the way down to 13.20, and then that provides our first, I think, clearer. No, this was another micro pullback here for a trade back over 14, but a little risky. Surges up to 15, unable to break that level, pulls back, and then this was our first 1-minute micro pullback. So let me move my camera out of the way. All right, so hopefully you got most of that. I hope you got most of that. Anyway, so did you miss the whole thing? I hope you didn't miss the whole thing. I don't really, my stupid camera. Okay. You did miss the whole thing? You got it. Okay. But anyways, really the emphasis here is the break at the pre-market high. So as with all, let's see. So I read this to you. The entry may line up with a $0.50 or whole dollar. That's very common. We'll talk more about $0.50, whole dollars in another section. It may simply be an aggressive early entry as I'm seeing green on the tape and no sign of big sellers. This setup will typically be the strongest on the leading gapper. And if the float is on the lower side, I wouldn't be as inclined to trade that setup on a stock with a 50 to 7,500 million share float, or a stock that, I don't know, perhaps, was not one of the leading gappers. So today, for instance, let me just move this down here. I'm gonna log in. I'm gonna try not to share my passwords on the broadcast. All right, so let's see. One time I had to, someone called me, I had to pay a bill, and I read out my credit card numbers while I was live streaming on our chat room and YouTube to like 10,000 people. So anyways, now I try to be more careful. So here, BPTH, this was our pre-market, this was our leading gapper. So 200%, 204%, CGIX was the second leader. So, these ones I would definitely be totally interested in trading the break of the pre-market highs. These ones down here, no, I probably wouldn't. It doesn't mean they might not have come up and come close to the pre-market highs, but I wouldn't usually expect that same level of follow through because there's not as many people watching it. Okay, so that was the entry. Now let's talk about the target. So the target here is continuation and 15 to 25 cents of potential profit. We're not looking usually, if I'm buying at the highs, pre-market high, if I'm buying right at the high, I know I'm in high. Now, if the stock is a low float, less than 5 million shares, like very low, in the case of BPTH, a 2 million share float, BPTH, not to dwell on this stock, but it's a good example because it is a former runner. So let's go back here. This is a stock that I think I told you about perhaps in the starter class, a hedge fund that their head trader took 800,000 shares short on this, and 800,000 share short position. It wasn't a huge hedge fund. It was a small fund. Lost like $15, $17 million. It was up on no news. He was like, my name's Anthony. This has no news. I'm shorting it. Shorting 100,000 shares. He shorts 100,000. It's going higher. I'm shorting another 200,000 shares. He keeps shorting it. Next thing you know, it's hitting 1460. Then the next day it gaps higher and it rips up to 72. And it was ripping to 72 as the clearing firm for the hedge fund was marketing him out of the position. So they keep pressing the buy button for 20,000 shares, for 50,000 shares, for 100,000 shares. And that was just fueling the squeeze. And I believe there was some litigation where he wanted to sue them because and then not to get into the details of it, but there was some articles about it. And it sounded like he had said he was willing to send them a personal guarantee and send them like $10 million. So, that night, because they're like, you're going to get a margin call in the morning. And he was like, no, hold it. I don't want to get out of it. I'll send you more money. But these things happen so fast that you don't have time to take a second mortgage on your house overnight. You could do a cash advance on your credit card. And if you'd been listening to my YouTube feed, he might have grabbed about 5,000 doing that. But realistically, there's just not a lot of time, and the clearing firms have to manage their risk. And so, he wasn't really wrong, I guess, but you're talking months later, it's still in the $10 range. It took a while for it to really, really fade back down. And because of that former runner status, because of this huge, huge day, it had a lot of these big green days in the following weeks and months where it would start to pop up and traders just, boom, they flock to it. So what is that? It's Pavlovian in a way. It's if I always fill a Kong, these are these like rubber kind of like toys, and you fill it with peanut butter and you give it to your dog and they chew on it. If you always fill a Kong with peanut butter, then one day, the Kong, you toss the Kong out, there's no peanut butter. I mean, they as soon as they see the Kong, they're like, I know what's in that. And you could fill it with you could end up putting something in that's not that treat, and maybe you get a rejection in this sort of instance. But it's just that you start to just associate, whenever I see this stock, good things happen, and that becomes a self-fulfilling prophecy. So, maybe you start with really good peanut butter, and then next thing you know, I'm giving her yogurt, and she's just like, I don't know, it still seems pretty good. But eventually, usually what happens with these is they do start to kind of self-correct. That's Alan Greenspan's kind of economic theory of markets are self-correcting, which is why you don't need regulation, because the markets will correct themselves. Bubbles may happen, but then they correct themselves. Now, I suppose that is true, but there could be a lot of pain along the way if you end up being in at the very top. But kind of self-corrected here. But then all of a sudden, look at this day. I mean, this day up to 24 is the best day it's had in like a year. Let's see, was this 2019? Yeah. Gosh, I thought it was longer ago than that, but yeah. Anyways, so that's fine. High volume today. We'll probably continue to see high volume. So this is a stock with a low float. It's a former runner. It has all of our criteria. So in this particular case, my targets were a little bit more aggressive because I was taking into consideration everything that the stock had going for it. Leading gapper in the entire market, low float, former Momo stock. Granted, the news to me seemed a little like, really receives a patent? Usually a patent is not a really strong catalyst. When we talked in chapter 3 about catalysts, I don't remember if we touched specifically on patents, but patents are usually not a really strong catalyst. I mean, you could file how many patents do some of these inventors have? Anyone can file a patent. A trademark, anyone can file a trademark. So some of these are not, but I was just like, listen, if this thing is running, I mean, I don't want to be the person that's trying to fundamentally analyze it and then miss this move here. So let's focus on technicals. So during a hot market, I may increase my position through the high a day, which I did on BPTH. So I was already in it, and then I was adding through high a day for that bigger move. And if I do that, I do need to be really quick to adjust my stop, so I'm not just increasing my risk. And I've had some trades where I start to get a little emotionally throttled, and I just start hammering that buy button. And I'm just like, add. And unfortunately, on days like that, the effect of doing that is that my cost basis goes higher. And yes, if I am right, and it does give that final parabolic extension for another 2 or 3 points, I can crush it, which is what's happened on my biggest green days. But if I'm wrong, and I've bought this and sort of bid it up higher and higher, and then all of a sudden the bottom falls out, and I was, no one else thinks it's as strong as I seem to think it is, it can flush. And now I've got huge size, and now how do I unwind a really big position? So I do have to be a little bit cautious, and my level of aggressiveness is going to vary based on a lot of factors. Some of them personal, where I'm at on the day, the week, the month, my P&L kind of equity curve. Some of it is going to be external, the strength of the market, the day of the week maybe. Some of it is going to be specific to that stock, the float and everything else. So you could probably, draw a, well, let's just get our, kind of thing here. You could probably do this sort of analysis of, internal, sort of all of the different factors of decision making for a stock. You've got your internal analysis, which is, your psychology, where you're at on the day, where you're at on the week. You have the external stuff, which is, what's happening with the market, everything, the day of the week, things like that. These things you can't control at all. And then you have the stuff with the very specific stock, which you also can't control at all. So you sort of have these different levels. It's kind of like a SWOT analysis. But not, I don't know if you'd exactly, I don't know if you'd really, if it fully lines up there. And I've never done like a full SWOT analysis for, if I'm considering doing a gap and go trade. I'll just pull this up here. So for those that don't know, we sometimes do these like, when you're when you're thinking about like making big decisions and stuff like that. So strengths, weaknesses, opportunities, threats, and you have the internal strengths and weaknesses. You have external opportunities and threats. you have helpful, you have harmful. So it's a way of kind of looking at things like that. But I I don't know that I would really. But there is, I mean, you could to a certain extent, just from the perspective of my internal strengths and weaknesses for the day. You know, I'm really good at trading momentum, but, you know, my P&L recently, I took a big loss last week. I'm kind of emotionally on the, you know, sort of feeling cautious. The opportunity of the stock, it's very strong. These are external, so it's very strong stock. We're in a pretty strong market. Threats, the news isn't that great. Short sellers may be starting to get aggressive. We may see some choppiness. It may not be quite the right time to go full throttle. All right, so in any case, and I think something that I touched on yesterday, certainly in the recap, but maybe in live class also, I don't recall actually, but I mentioned that when the leading gapper fails, that can be, you know, that can be very significant because so many of us are looking at the leading gapper. When that fails, it just kind of can sometimes be the end of the move. The sort of end of momentum for the day. It can weigh that heavily on the entire market. So something that you'll notice, in fact, is the relationship of stocks that sometimes that rising tide that lifts all ships, they trade so similarly. You look at the charts on AMC and GME, and these charts are following each other. They're practically mirroring each other. And it's a combination of retail trading following sort of just, they trade so closely together, and there's some high frequency algorithms in there as well. And then on a day like today, you know, we had initially BPTH, which was pretty strong, but we had CGIX, which started to recover and then immediately went red. We had AUVI, kind of a similar pattern, started to recover and went red. And now BPTH has pulled back quite a bit. You know, it's still sort of hanging in there a little bit better. But when one starts to fall, often the others fall with it. So this is something to be really mindful of, because today I made the decision to trade pretty aggressively at the open, pre-market and into the open. And then once I was up more than $10,000, I said, okay, I'm reducing my share size by half for the rest of the day. 20,000 share size was my biggest position at the beginning of the day. I dropped it down to 9,000. After I was up 20, I said, okay, I'm dropping it down to 4,500 shares for the rest of the day. And with just 4,500 shares, I still got myself to up 45,000, which was fantastic. And then I said, okay, now I'm reducing it to 3,000 shares. And I did give back a little profit with smaller size. But if I had kept trading BPTH all the way to the very end with full size, in a very, very hot market, I could have certainly rolled that into a $75,000, $100,000 green day. However, what I've had happen to me probably 5 out of the last 7 trading days before Monday was I was up $15,000, $20,000 to $30,000, and in one trade, gone, back to break even. And that was the moment where that main stock rolled over and failed. And because it was rolling over and failing, there wasn't another opportunity for me to make back those losses. That was it. And now if I was trying to make back the losses, well, the tide was rolling out. Everything else was fading. And so there was really no chance. And at that point, it was like 10:30, 11. It was getting later in the day. And then the odds of recouping those losses are harder and harder and harder as the day goes on. So in this market right now, although it's been hot, it's been a little finicky, where we've seen like stocks rip and then totally die. And another one rips and totally dies, and then sometimes that's just dead for the rest of the day. So because of that, I'm making the decision to change my level of aggressiveness from full throttle all day long to, you know, kind of aggressive, a little conservative maybe on my first couple trades, build the cushion, then up to full throttle, you know, kind of planing, being aggressive, like planing like a boat, and then starting to ease off as we're slowing down, as I'm coming back into the harbor and getting ready to shut it down for the day. All right. So the risk factors on buying the break at the pre-market high is that anytime a stock is on the gap scanner, we obviously know it's extended, but it is still one of my preferred ways to enter a strong stock. False breakouts, however, are not uncommon, and that's really the most likely risk, that, you know, we jump into it and then boom, there's maybe a big seller, a false breakout, and it flushes back down. The stop loss depends on the time frame, if a 5 minute or 1 minute, depending on the time frame you're focusing for your pattern. So if you're dialing in your entry based on a 1 minute or a 10-second chart, then you can use that time frame, the low of the recent pullback, as your stop. Arbitrary stops can be okay as long as you have the discipline to follow them, which is hard. for some, for me included. The profit target can be 10, 20, 40 cents, 2 to 1 generally, but with some of them, if you've got that right combination of flow, strong market, and everything else, that's when we can see 4, 5, 10-point moves. I mean, we've literally seen that several times in the last, I don't know, last handful of trading sessions. We can look at the trade on, let's look at Sino for a second. Sino from last week. Let's see, this one was crazy. Sometimes E signals a little bit, I don't know why. BBTH, Sino. It's like, just load the charts already. So it's got to be somewhere in here. I'm waiting for the candlesticks to load. Thank goodness stocks don't go negative. Imagine that. That would be terrible. I don't know why it's doing this. Is it a time frame issue? Auto. I think it's a time frame issue. All right, so let's go back in here. But I need 24 hours time. 24 hour. Because I need the pre-market price action. So, oh, it was back here. Yep. Okay. So on this one here, I mean, this one, so this one just kind of went straight up. And we sometimes see this. So let's actually look at the 10-second chart on this. We're going to have to go back a little ways. But we're going to see some micro pullbacks. And those were what gave us the dip opportunities. Okay. Oops. So you have a micro pullback on this. As it started to pop up, there was a little micro pullback at 8 right there. You can see right in there at $8. Little one right there, little one right there, maybe a tiny one right there. And this thing went from 8 to 16. I mean, it just kind of went like straight up. Pulled back, little dip trade. Looks like it was going to continue higher, then start to get choppy. So that was the leading gapper. On that day, that was the leading gapper. And you know what Sino is? A former runner. It's a former Momo stock. So, you know, you've got another one there that has a history of making big moves. And in this market, irrational price action, exuberance, it was gone. It all of a sudden just ripped and was very fast. So there are times when the market is like that I will be more aggressive, and profit targets can be a little bit more aggressive. I would say this is probably the strategy that I trade the most often, but false breakouts do require me to take profits quickly, which is why my profit loss ratio is probably a little bit lower on this one, taking quick gains and then taking the profit out. So in this case here of CDTI, the pre-market high is 251. The bell is ringing, and I just said, all right, guys, I'm watching the pre-market high. If it breaks the pre-market high, well, as soon as the bell rings, it's going to be hitting high day scanners as it moves up. So, and then anything certainly over 250 is strong. So as soon as the bell rings, it starts hitting high day scanners, it starts ripping up. I'm in, and I ride that momentum up to 340. IO right here. Pops up, pulls back, pops up, pulls back. So you can see we've got a pullback set up there, another one here, another one here. At the open, right there, bought the break at the pre-market high. When they open really close to the pre-market high, that's when I often like to just kind of jump in right at the open, because sometimes we'll end up seeing stocks squeeze right into halts. And that's basically what we ended up saw happen today on BPTH. This is another example. Pre-market high is 510. So I drew the line there at 510. That's the pre-market high. It opens, it dips for a second, curls back up, breaks through 5. I'm in for the break of 5, looking for an immediate rip through 510, the pre-market high. It surges through up to 560, 10%. Micro pullback on the 1 minute, then rips a little higher. So you can see how that's a fairly clean, fairly straightforward setup. The break of the pre-market highs. So I would say that this one is perhaps a little bit easier to recognize than some of the others, just because, you know, the pre-market high it just is what it is. It's pretty easy to see it. All right, let's see. So here's another one. Pre-market high is 391. So, you know, again, just to kind of go through the process, we look at the leading gapper. Say, oh, it's BPTH. Okay, so if you're sitting down at, you know, 915, you say, all right, BPTH is the leading gapper. What's the pre-market high? Pre-market high is 1701. Okay, so as the bell's getting ready to ring, where's my order? Well, I'm probably going to take an order here on BPTH and say 1701, 1,500 shares maybe, smaller size. but that's the spot that we're looking at, 1701. Break there, squeezes right up immediately, instant resolution, break of pre-market highs. So there we got the break of 391 and the squeeze up to 440. The loss on it, max loss, 15-20 cents. Again, we would be focusing on primarily the leading gapper. We wouldn't do this on every single stock that's gapping up. I would just focus on which one I thought was the best based on price, float, catalyst, market strength. So you can't expect that this is going to work the same on every single gapper on the scan. And if we just look at, if you want, we could just look at all of them today. So BPTH worked. CGIX. Well, this one, the pre-market high was way, way up here. So it did break at the open and squeeze up, but that's not a break at the pre-market high. It's just kind of a squeeze at the open. OLB. OLB had a pre-market high of 1373. It popped up here to, 1520. It did pop up here to a high of 1475. It pulls back, and then on that 5-minute bull flag, it did break through the pre-market high. Not exactly right at the open, but it did. UAMY, that's a big higher float, not as much interest. TLRY, this one, strong pre-market, opening a little bit lower. BHTG. And now we're starting to get further down the scans, and these ones were not as interesting. Most people are focusing on these top 3. So focusing on those ones is going to generally be the way to go. Pre-market high on this one, this was a light volume gapper from 260 up to 3, which, is still a 25% gap. It may have been the leading gapper in the market. It dips down, then all of a sudden it's hitting the high day Momo scanners. It's ripping up. And let's say we pull up the stock and we say, oh my gosh, there's actually news on it this morning. That's why it was gapping up 20%. Might not have been the leading gapper, might not have been the one that we were focused on, but maybe it was. I don't recall. This is from 2016. But it rips there from 3 up to 380. Not bad. First pullback on the 1 minute, it pops up, not back all the way to the highs. VRNA, pre-market high of 948. Not a perfect pre-market chart, a little lighter on volume, as you can see. High is 948, it pulls back right into the open. It's opening almost at the high, then it opens just a little lower at 910, surges up through 948. So since the breakout spot was at the $0.50, could we have potentially bought that at 942, 945 to anticipate the breakthrough 950? And I would say in that case, probably that would have been okay. Or just at 948 would have been fine. And then you get that quick squeeze up to 10, 1050, all the way up to 11, all the way up to 12. That's a nice trade. That's a gap and go trade right out of the gates. To be honest, the break of the pre-market high, the only reason I don't cover this setup first is because a lot of traders will feel more comfortable waiting for the first pullback. Because, of course, when a stock is just ripping up, it feels hard. And buying at high of day here feels a little risky. And it is. But on the other hand, when you have a pattern like this almost does take the form of a flat top breakout. Not all of them will. This one isn't really. But this one's a little bit of, this one kind of is a pullback. It's sort of a pullback pattern and the high is right there. This one's also kind of a little micro pullback right there. And this one is too. So sometimes we're combining setups in a sense where we've got the first pullback and it's a break of the pre-market high. So not only might we have multi-time frame alignment, we have multiple setups all giving us the same confirmation. That's only going to make the trade generally work better. Because then, you'll have some people who will say, well, I only trade the break of the pre-market high, or I only trade the first pullback. But when you have both of those happening at the same time, then you have both of those types of traders taking the trade. As we go through all of these strategies and sub setups for gap and go, for momentum, for reversal, for everything else, you don't necessarily want to try to trade all of them at the same time. You want to find one or two that you feel like you can understand, that we are seeing quite often, and and then focus on those. And then once you get those down, then look to expand and add additional setups. So that was VRNA. So here's another one, pre-market high right around 320. It looked like there was an after hours high at about 330, but pre-market high was 320. The bell rings and it rips up to 560. First pullback gets bought up, and this was on a 5-minute chart. So on the 1 minute that there were micro pullbacks right here, and right here as it was continuing higher. So this one, the pre-market high was 365, and it opened and surged immediately to 420. So it was opening at its pre-market highs, and it surged right on the open. That's very common. We do see that a lot. and that's usually a pretty quick, easy trade right at the bell. The only challenge, kind of like the example I showed you of the first pullback at the end of part 1 or setup 1, is that right at the bell, for a moment the bell rings and sometimes we'll see no volume. And then all of a sudden we'll see some red orders going through, which are probably market orders. Then we'll see some green orders going through. The prices start jumping. And then it starts to do what it's going to do, which is either rip or maybe drop, or usually rarely go sideways because they're usually volatile at the open. And so because that's all happening so quick, sometimes it can be hard to get in before it rips. So that can be a little challenging, but it gets easier with practice. So here's another one. Pre-market high here was 431. This was a gapper. This was years ago at this point, but very light volume, but probably had news. Excuse me. The bell rings. It pulls back, surges up from 4 up to 5, pulls back. Now it's hitting high day Momo scanners. Traders are jumping on it, and then we get that continuation up to 6. Here's another one that's a little bit easier. This kind of pre-market, the first pullback. The first candle made a new high on that green candle and continued on the red one and then dropped down. And then at the open, it just surged from 5 up to 9, 10. Break the pre-market high. Here's another one where it was opening right underneath the pre-market high. It opened and surged from 660 up to 760. So when they're opening really strong and they're the leading gapper, that's usually when we see a nice move right out of the gates. Here's another one. Was kind of pretty strong here, opening just under the pre-market high. It breaks that level, surges up, pulls back, surges higher up to 7. Here's another one. The pre-market high was 645. It's opening right underneath that level. The entry order most likely would have been at 650. So I'd put my order entry window right around 650, maybe 655 to allow a little slippage, but almost definitely getting in 645, 648 for the break of the $0.50. It surges into a halt. It opens higher. It halts a second time. It opens higher. It squeezes all the way to 950, from 650 to 950, and then it fades. And once it starts fading, if that was our leading gapper, it wouldn't be surprising to see others sort of fade as well. If it keeps going, it wouldn't be surprising to see others keep going as well. They often kind of take their cue from what the leading gapper, what the strongest stock at the moment is doing. Nice pre-market consolidation here. First candle to make a new high. Could have worked both here, and even back here. Pull back, rip, pull back, rip, pull back, rip into a halt. Opens higher, surges higher up to 11. Can't complain about setups like that. This is tough. Straight up from 60 cents to 220. So with something like this, yes, the pre-market high is like 225. It opens and rips into a halt, second halt, opens higher, halts coming down, halts coming down, halts going up, halts coming down, halts coming down, halts coming down, halts going up, opens higher, sideways. That's tricky. This one was so extended at the open. It did continue higher. It did halt up a couple times. But remember, these cheaper stocks will halt faster, right? So, a 10% move, a 20% move on a cheap stock like this is going to be halting just like that. So sometimes when they're doing that, they're actually a little bit hard to trade. So this one, it's a good example of the pre-market highs breaking, but not an easy one. HUSA. So in this case here, our pre-market high is up around this level. It surges up and hits it, pulls back, comes up a third time, breaks through it. So by the time it broke the pre-market high at 450, it was actually a little after 10 a.m. This right here, we would call the pre-market pivot. So that's the pivot. It curled up, it pulled back. If we break through that level, looking kind of the way we do in chapter 4 of gaps and windows, we look left and up, left and up, left and up. So if we break this level, we're, to this level. If we break that level, we're to this level, that level to this level. So that's where we start seeing, okay, if this breaks these levels, do we now feel like, momentum is clearly shifting, where the tide is now really starting to roll back in. So let's look at a break here of our pre-market highs. All right, so here we've got oh gosh, what happened to that? Oh, okay, I think it's just a typo. All right, I'm gonna have to go fix that. There we go. Yeah, there's just a typo in that. Okay, so perfect gap and go trade. All right, well, let's see. So this is IO. All right, so we'll get oriented here. This is the stock right here. The bell has just rung. The pre-market high is looks like just under 350. We've got our 1-minute chart our 5-minute chart, our daily chart, no 10-second chart, but we do have news window right here telling us that we've got news on it, which is earnings. It's up 101%. Now, again, I don't know for sure if it was the leading gapper, but I can pretty much guarantee you I wouldn't have been looking at it if it wasn't in the top 2 or 3. Because I usually wouldn't trade a gap and go if it's not. So I assume it's probably one of the top gappers on the day. There's the bell, and we had the bell, and then immediately we're seeing volume. And so as soon as I saw that green on the tape, this is where our tape reading skills come in. This is why we did the level 2 tape reading class before getting into this, because of the live trading examples. So right here, I'm waiting for green, and there we go. I'm seeing green. You see that green on the tape? Right here, we're seeing green on the tape. There's more green. Now a little bit of selling. I'm holding at 48. There we go, 57, 65. A little bit of red, but still pretty strong. There we go, 75, a nice big burst of green. We've broken the pre-market highs. Next target psychologically, 4. Now let's check the daily chart. Notice we're below our 200 moving average. So we're a little below the 200 moving average, but we have room to 579. So even though it's below the 200 because we have a lot of room to 579, I'm not really worried about it right here. It's at 375. We have some small gaps in windows, but nothing really big. There's a bigger one from 5 to 571, kind of right in here. There's a couple smaller ones, but nothing huge. But that's okay. It's a leading gapper, and I can check the float on it. Let's see. Now, again, the float today could be a little different from what it was back when I traded it, but it's showing right now an 11 million share float, so it's pretty low float. So there's 75, there's 76. So what's happening right now? This stock is hitting high of day momentum scanners. Traders all around the world, E-Trade, Ameritrade, Robinhood, they're seeing this stock hitting new high, new high, new high, up 126%, 3.6 million shares of volume. And some people are just going to start buying it. Now, a lot of people will wait for the first pullback, but we're going to start seeing that buying. There's 85, 86, 87, 88, 90, 95. Okay, we're coming up to what psychological resistance level? The whole dollar, $4. Now, on this one, I didn't trade as aggressively as I could have. I don't know why, but I'm only holding 6,000 shares. I put an order here at 86 to sell 3,000. Going in here, increasing my share size. I must have been in some kind of like trader rehab. That's what I can assume. Okay, added back there. So the 1-minute chart not showing that dip, but you can recognize that what we just had there was a dip. So let's watch and try to visualize and hold in our mind what's the high. My eye is right here on the ask. 65, 65, 75, 80, 83, 80, 86, 89, 90, 94, 95, maybe tap 97. Now we're dipping. Right down here, possible dip trade. Possible long down here for a retest of 90, of 390 and 4. So right down here, looking for green, buy, 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 buy. That's where I'd want to be buying right there. Seeing that green on the tape. There's 97. We're double topping. Now I'm not even looking at the chart. I'm looking right here at the ask and the tape. I don't need to look at the chart because I know, I can glance at it, but I basically know what it looks like. Now, if I look at the chart, it's possible that I would notice, oh, that last candle was a topping tail. Okay. So that now maybe I do have to glance at it every, now and then. Just like when I'm driving a car, I glance at my mirrors, maybe check the rear view mirror, but mostly I'm looking at the road ahead, which is right here. So let's back this up again. Let's do that again. Okay, so we have the dip. Right here as it rips, starts to curl back up, we start to see that green. That's the little dip off the whole dollar. Now it's curling back up. Watching. Here we go, 87, 88, green. All that green right there on the tape. Now I want to see 95. There's 94, 97, and some green at 97. That's good. We want to see a break 4. Now a second pullback right underneath 4. Okay, so it tapped, it pulled back. Can we do it now on this next try? Here we go, 97, 98, adding right there. Green, adding, looking for the break of 4. It should snap. And it's snapping. It's breaking through $4 and it snaps. This is the place where, what do we want to do? Typically, sell half. Am I going to put the hotkey out? To sell half. And I do. I put the hotkey out. Notice this. So right here, I press the hotkey to sell half right there. However, my own restriction, which I set, is blocking me because selling, actually I put the order out to sell 10,000. And under the trading window here, under warnings, I must have had this still set at 6,000. When size is too large, warn. When position is too large, warn. Now this is very helpful for me. It helps slow me down. So, you know, on ZVZZT right now, if I do an order for 6,005 shares, what's it going to say? It's actually not even going to say anything. It's just going to say, sorry, dude, you got nothing. No orders, max size. Now that's helpful for me because I can get so in the tunnel of staring at level 2 that I don't realize how much size I have. And I'm just adding, and then all of a sudden I'm like, oh my God. So, you know, that's me when I'm kind of in the flow state and or sometimes when I'm emotionally hijacked. So I set these thresholds here to slow me down. So in any case, I had that set, but then what happened was when I pressed the hotkey, this was a mistake. So now I missed my opportunity to sell and I sold half on the bid. So I tried to sell 10,000 shares. I sold half on the bid at 401. Now, is it going to hold 4? Is it going to hold that psychological level or is it going to break back below it? 410 is our next target. If it breaks 410, I'm a buyer. Stop at 399 or 4 for the move up to 425. We're struggling to get back over 4 and we're fading a little bit too far. Now, as we come down to the 80s, I sell more, 97, 80, whatever, because now we're below that critical level and it's not breaking. So a question there, what made you decide to hold versus taking some profit when it went to 97 and declined? So the first attempt at 4, you know, it hit and then faded. And then it came up for the second attempt right here. No, that was the third attempt. The second attempt was probably right around here. It came up right there, and it couldn't break. I think this would have been a perfectly okay time to say, you know what? I'm going to take half off the table, especially if my cost basis was higher. But I'm in at 59. So I actually have a bit of a cushion on it. And perhaps my feeling was, you know, this time of day, 9:30, it's the leading gapper. If there was ever a time that it was going to break, it's now. This is when they're strong. So I try not to get chopped out, but we do sometimes see big whips, you know, at these times where it could hit 4 and then just totally reject. And then everyone that is holding and hoping gets stopped out. So in this case, it was probably a combination of things that made me say hold it. Because there are other times where possibly with bigger size, I'd be a little more erratic and I would say, you know what, get out, get out, get out. And then next thing you know, I'm getting back in at 97 as it curls right back up here. I can see the halt level on this is 49. Right there, that's a nice break. This is where I want to take half off. I miss it, hit the bid just to lock it up. So not a perfect execution there. And then what does it do from here? Looks like it fades a little bit. We still actually have not had a proper 1-minute pullback. So now at this point, we can kind of wait for that. New order is at 402. I just added back at 92, it looks like. We have a double top now at about 410. I unwind the position there, a little nervous about the double top. New orders at 412. There's 410, adding for the break of 412. There's 415. Again, same issue. Gosh darn it, I got to get in there and fix that. I'm in at 401. I have to bail if it breaks below 4, but it's holding here. Sort of, not great. People get nervous when it does this. Uh-oh. 402. Okay, it's holding though. Adding back there, 408. Looking for the breakthrough 12, 13, 14, 15. There's a seller at 15. Taking some off the table at 12. Cost basis is still pretty good. There's 15. It's thinning out, but there's still a seller there. It broke, but then came back down. I'm selling the rest of it. So that was a nice trade. Let's look at another one. All right, so long for the break of the pre-market highs. Okay, so we're going to focus on the long. I guess I flipped short on it, but we're just going to talk about the long and not try to overcomplicate this. This is blurry, but it should get clearer in a second. There we go. Okay, so come on. Fran is our leading gapper, and I did a favor and put it right there. So 2.88 million share float. So it's a low float stock. It's our leading gapper in the entire market. It's up 92%. It's got news. We've got a fiscal Q2 earnings snapshot. Not bad. All right, so the bell is, we're 1 minute from the bell ringing, and it looks like it's going to open right at the pre-market high. So tell me right now, where would you set your order to buy this? Or if you're watching on the LMS, write it down. Where would you set your order to buy? Tim is asking for clarification on that hidden seller. So Tim, for clarification on that little hidden seller that it looked like we had, that was on IO. It was sort of right here at the very end. And what we saw was a seller at 15. And it looked like, so it to me kind of looked like there was obviously a seller at 15 right here. We saw a lot of buy orders going through, but it's not quite breaking. Now then it does break, but then it's back kind of at 15. So I'm not sure if that, I don't really think that, I don't know. I'm not sure if that actually was a hidden seller or if it was just kind of, I don't know, choppy there. Okay, so you guys are saying on Fran, your orders would be at 10.05, 9.90, 10.02 for the break of 10. All right, so let's look at this. So our pre-market high, it looks like is about 10.05. So I would say 10.05 would be a fine spot for an order. I think, Jessica, if you put your order as high as 10.25, that would be fine. It's a marketable limit order, but you could get that slippage. You could actually fill at 10.25, which would be about 15 cents, it looks like, above the pre-market high, which would be a little high. But I would say probably 10.05 to 10.10 would be a better place. We've got about 2.7 million shares of volume. And so just to answer that question, the live trading examples that I have here, these are all in my sort of personal library that I use for classes. Some of them are also in the live trading archives, which are part of the, well, we call it the live trading archive. So some of them are also in there, not all of them necessarily. So yeah, just FYI on that. A question here, Ross, why do you have this set up twice? Well, this stock is easy to borrow. And so I actually set it up so here over 10.10 I'm long, and below 9.50 I'm thinking about going short. We'll talk about short strategies a little bit more when we get into that chapter. So for right now, let's just focus on this side. This is not very common for me to do this. Okay, so 10 seconds to the bell. 8, 7, 6, 5, 4, 3, 2, 1. And you know what? I'm going to pause it right there at the bell. What we often see today is that traders are not waiting for the bell to ring. And so we just start to see it ripping up before the bell because traders just don't want to wait. They don't want to miss the move. And I get it. I don't want to miss it either. This one, you know, this was over a year ago. This is I mean, it's an older video somewhat. But anyway, so there at the open, see all those orders going through? Those are all those kind of, you know, orders right at the open. Oh my gosh, look at that. I pressed the buy button. I got filled at 10:09. So you know what, Jessica? Your order at 10:25 was right on. I pressed it a second time at 10:12 and I didn't fill. So I'm in at 10:09 and I put out my sell order at 10:33. So let's back this up for one quick second. So this is one of those cases where, you know, you actually would have done better if you held from pre-market because it just immediately jumped up there. And then right here at 39.40, it kind of feels like it's hitting a little bit of a wall. Why is it hitting a wall here? I mean, a lot of volume is going through, but it is just kind of struggling. And so in this case, because I felt that it was struggling here, right underneath the $0.50, I took a short trade on it with a stop at 10.66. So if it breaks through the $0.50, I'm going to cover that short. But it feels to me like it's just, there's a lot of people selling shares up here. And just like that, it comes back down and I cover it for $2,000. You're not going to see a lot of that. I don't usually like to flip-flop. In this particular case, this was a stock that was easy to borrow. The float on Fran, I'm actually not sure what it is now. The float is a little higher, but I think what's more significant here is just the fact that this was opening high. It was already a little extended, both on the 5-minute and on the 1-minute. It did surge through the 2.8 million. So it did surge through the open, but it was also easy to borrow, which is a little unusual. So that's the type of thing that might even make me say, you know what? Maybe I should double check this, go over to BAM SEC and type in the stock Fran, and let's just check this for 1 second. So how do we find the float of a stock? The 10Q. All right, so where is it going to say this? I can't remember where they show it now. Usually it's like right at the top. There it is. Registrant had so about 3 million shares. So in fact, the float is about what it says it is. But in this case, it just seems that it's kind of struggling there. So when I see a stock is easy to borrow, it makes me think that you'll have more people shorting it because of and I shorted it just because it's easier to short. And so that combined with the fact that this does not have short sale restriction makes it more likely that it could be choppy until it really starts to squeeze out short sellers. And this wasn't squeezing out short sellers. So orders there at 12 to buy right here. All of a sudden it opens high, but then it's just sort of pinned here. All these orders are going through, but it's not breaking. All these orders are going through. I mean, hundreds of thousands of shares. We already have 200,000 shares of volume, and it should have broken. Why is it not breaking? And we're seeing those sell orders go through. Now, this could also 1-minute micro pullback and then rip. It's not to say it couldn't have. I just sort of felt like, I don't know, on this day, maybe it was a combination. And actually I had my hand on the buy button there just to cover just in case. I thought there was a possibility it could go the wrong way, but yeah, it was just choppy out of the gates. But in any case, a break of the pre-market high. Okay, so break of the pre-market high. Now let's look to the next one. This is a gap and go trade on LEDS. Okay. All right. All right, so LEDS, only 100,000 shares of volume pre-market on it, but it's up 50%. Squeeze from 540 up to 680. So this is one of these times, and this was a couple years ago. As I had mentioned a couple years ago, I really didn't trade pre-market ever. We usually didn't have any volume pre-market. This was typical. You'd have a stock that was gapping up 50%, but with not much pre-market volume. And then as soon as the bell would ring, volume pour in. And now it seems to be the case more and more that we will just have a lot of volume pre-market and the move starts earlier. So, and to answer the question on that last one, how did I know that that wasn't a hidden seller, up in the 40s? I mean, it seemed like I didn't know whether it was a hidden seller or not, but it seemed like there was clearly resistance there. Now, it could have snapped right through that level, and if it had, that would have been a quick loss. But I guess on that day, I just sort of felt like it wasn't happening. Just didn't seem like it was looking right. So already here, I'm going and increasing my share size on this. 20,000 shares, max size. Okay. Look at that. It's not even waiting for the bell to ring. It's starting without me. Now we're up 70%. Ten seconds to the bell. So where should I put my order? The pre-market high. Notice what I just did there? I put my mouse over this candle right here to check the high of it. High of that candle is 736, right there. So I check the high of that candle. Then I come back here and I enter my order to 740. Put my hand over the buy button. Probably could have gone ahead and put the order a little bit higher than that, but, and look at that. The bell rings, and I actually got a couple of really good fills there. Let's back that up. So here we go. Getting ready for the bell. Well, so it for a second is opening kind of lower. I punched the buy button 3 times. All of them were at 40. I fill all the orders at 98, 05, and 30, all in the same timestamp, 32 cents apart from the bottom to the top of that order. Moment of truth. Is it going to rip through 50? Yeah. And I take some off the table. Why did I take some off the table on that? I was in deep. And if it didn't work right away, it was going to be bad. And sometimes they'll pop up like this and then reverse. So let's back it up here. Now, this would have been likely the leading gapper. LEDS is a former Momo stock. The float on it is about 2.3 million shares. So it's not just a low float, it's a super low float. So I've got 15,000 shares, average is 711, and I'm already showing down 1,800 bucks. Now I'm showing up. Now we're seeing some more orders go through, but a red order just went through at 671. Another one at 674. Another one, now the bid is 706. So I'm like, uh-oh, do I have the wrong idea on this? Some more sell orders. So this is why I'm a little bit nervous. It breaks through the $0.50, and I'm like, you know what, dude? You have 15,000 shares of this. It's got really light volume. Let's put the order out on the ask to take some off the table. 66. You know what? That might have... Did I hit the bid or do I think I hit the bid. I think I hit the bid there, which I tip it. Let's see. Oh, I can't see what control button I pressed. I think I might have hit the bid, but I might have sold on the... Actually, it looks like I sold on the ask. The open P&L is usually based on the last price, but some platforms will do it differently. So now all of a sudden here it's up to 90, 95. We're up 62% on the day. I got an order out at 94. I'm still holding 8,000 shares. I take a little bit more out at 59. Now at this point, selling at 61 and 59, I'm selling during the dip. This is where in a hot market, I actually want to be adding for the breakthrough 8. However, in the context of this current 5-minute chart, it has just gone from 550 to 8. It's pretty extended. We haven't had a proper, like a really good 1-minute pullback. So let's see whether or not traders do jump in right here for that trade over the highs. I put the orders out at 78. I should have moved them higher, and I'm actually not sure why they're at 78. They should have been higher. So I got filled. Now looking for the break through the high. It dips down here. I'm in at 61. We're going to break through 8. And all of a sudden, we're right into the halt level. Now, this was actually before I realized what LULD was. I mean, I've been trading for years, and I just never noticed. I knew the distinctive halting pattern, so I was like, oh, it looks like this is about to halt. This looks like it's about to halt. But I didn't recognize until I actually was teaching class and went back and was like, what is this LULD? And then realized that, wait a second, that's the halt level. Before that, I didn't even know. It's embarrassing to say, but I don't know how long those halt levels have been there before I recognized them, but potentially for like years. But the market has just continued to kind of get more and more just volatile, where early in my career, I don't know if the first time I was in a halt, I mean, I might have been trading for months or if not over a year before I was in my first halt. And now we see halts multiple times every single day. The market is a lot more volatile, and we do have a lot more opportunity now than we did then. So the letters LULD are limit up, limit down. So it's a circuit breaker halt. And you guys shouldn't feel embarrassed at all for not knowing, because you're at the beginning of your learning curve. But I've been trading already at that point for 7-8 years, and I still didn't know. So that's where I was, and I was teaching classes and everything. But you know, you learn something new every day. Okay, so our halt time on this was at 9:30 and 40 seconds. So resumption will be approximately 9:35 and 40 seconds. So let's go ahead and jump this forward to 9:35. Let's see, 9:35 and 40 seconds. Okay, so right now we're showing a quote of 840. I put an order out to buy at 7.99, so I'm ready to buy a dip, but it looks like we're going to open, you know, a nice 40, 50 cents higher. And there we go, looking for the break through the $0.50, and I'm adding. Now that it's showing this level of strength, this is where I'm kind of thinking that we're going to just see that feeding frenzy of irrational momentum, just super, super strong as traders just jump on it. Short sellers, get squeezed as it moves higher, and long traders who are degenerates and chase Momo with FOMO Momo, like I sometimes do, are just buying it as it goes higher. Next target, $9. So $8.50, $8.75, then $9. Taking a little off the table there, around the $0.50 as it's kind of straddling it. When I'm talking about straddling, it's when the ask is above that level and the bid is below it. So, that's a technical term. So we've got 850. So I sell the rest of it, and now the halt level coming back down is at 648. I can see it down there. I didn't know it at the time. At 972 going back up. But look at that, right back up. Added back at 41 for the break through the $0.50. Look at that, snaps right through the $0.50. That's a nice break. Boy, those are nice days. This is a $15,000 day. This was a big day for me. This was a really nice day. High is, what's the high? I don't know. So Jim says he's fearful of halts. I've been bailing before halts. Well, I don't think there's anything wrong with that. Inherently, being in a halt is a little scary. And I recognize that. Why is this all paused? Is it just, that was weird. Was that a data issue? What was going on there? All of a sudden, it seemed like it was just everything paused. So right here, everything is pausing. That tells me possibly I'm having a data issue on my entire computer. If all 4 level 2s are pausing with no data coming through, that's not good. I was offline there, it looks like, for a second. So, but yeah, we've seen, so one of the problems sometimes is that when a stock squeezes up so much and then gets halted, and we saw this a little bit yesterday on AUVI. Again, this is a little bit of a tangent, but to try to just give you the most comprehensive education possible, I'm just going to show you these things. So AUVI yesterday, we saw several times where it halted going up and then opened a bit lower. So here, this halted going up, and then on resumption, it halted down. Usually, I'll say that after 2 to 3 halts going up, I start to worry about the possibility of a halt coming back down. I often will buy before the first halt going up, and I'll often hold into it. I often buy after the first halt going into the second halt and hold. Sometimes I'll buy after the second going into the third. But oftentimes after the third halt going up, I'm starting to worry about a possible halt going down. But what has always typically been the case is that halts going up open higher and halts going down open lower. Sometimes a halt going down will open higher. And when that happens, it's very bullish. And it actually happened today on BPTH. BPTH halted going down at 22 right here. And then it opened higher and ripped right back to the high of 24. So that was a halt down, but it opened. So it halted down at $20.56, and it opened at $21.50, $1 higher. That scares short sellers. Happened here too. It halts going down at $19.50. It then opens higher at $18.80 and rips up. Sorry, the low was $15.95. Then it opens higher and rips up. But generally what we have found is that stocks that halt going up open higher. And I'll show you a lot of examples of that. So I am not really fearful of being in a circuit breaker halt going up. As we talked about in the halt section, both in the starter and the pro classes, if we are trading a NYSE, NYSE or Amex stock, so a stock that's listed on the New York Stock Exchange or the Amex, American Stock Exchange, which we would know because it'll say here Amex, or if you're in the simulator at the bottom, right underneath here, there'll be an A, an N, or a Q. Q is for NASDAQ, N is for NYSE. So we know that these stocks have had a history of getting halted when they're up to 300% with no news. However, GameStop is a NYSE listed stock that went from $50 to $500 and didn't get halted by the exchange because they had no news. So we're not totally sure the rhyme or the reason on that. But the other scenario is that sometimes when you have a stock that is what we would call chasing the halt levels, where it is halting, then the halt level moves higher and it rips right higher, and then the halt level moves higher and it rips right higher again, that's when we start to see that when it finally does halt and resume, that traders sort of panic and we get that sell-off. And so we had that a little bit this morning right here, twice. It was sort of chasing those halt levels up, and then halted and then resumed. The fact that it wasn't strong enough to actually halt the first time is, I think, probably why when it resumed, people were selling. But generally speaking, stocks that halt going up open higher. So usually I like to be bullish. I like to hold into halts, but sometimes the market will tell me not to. All right, so LEDS here, I don't remember if we have more trades on it, but the real trade there, which is based on our strategy, was the break of the pre-market high. Now, because LEDS is strong, here goes cone, a nice move from 7 up to 9. So this is what we would start to say is possibly sympathy momentum. All right, but we're gonna go to the next recording. Okay, so next one is CPAH, break at the pre-market high. Oops. Okay. All right, so it's right here coming right into the bell. So right there is 9:30 and 2 seconds. I'm lifting my chair up. So 9:30 and 2 seconds, CPAH. It's on watch now. I'm looking at this and I'm like, it's only up 20%. This doesn't seem that impressive. Is this really the best gapper today? And if it is, then clearly we're not in really all that strong of a market. But anyways, the pre-market high on it looks like it's up just maybe around 45 or 50. I have an order here at 30. Right there, I jump in at 41 to anticipate most likely the break through the pre-market high and then the break through 350. We break through 350 quickly. This is a place where I could consider taking some off the table, but 7,500 shares is not a very big position for me, so let's see what I do. I put orders out to take a little off the table in the 60s. Notice that we have a 1,200 share bid at 50, a 11,000 share bid at 50. That's not bad. So I can always hit the bid. There's 68, 69. Now the bid is gone, but it appears to be holding. And then it's gone. Well, gone, but then pops right back up. So that's an example of that quick kind of pop right at the open. Gave you enough to get your 10 cents, but not a lot more. Of course, with 7,500 shares, it's a $1,000 winner. So let's refresh this, go back to the beginning. The entry, break at the pre-market high. Leading gapper most likely. So I'm in at 41 to anticipate the break. As I saw all that green on the tape, that's what gave me the conviction. Now, if I didn't see any green, I wouldn't have pressed the buy button. But because I'm seeing that green, that tells me other people like this too. So I press that buy button. We get that squeeze. There's 63. I take some off the table, which is the smart thing to do. 68, not bad. Volume is very light on it as well. But that's okay. That's not at this time, that was not uncommon. These were just kind of little base hit trades and taking the rest off as it comes back down. I could always hit the bid right there, but I end up hitting the bid as it comes back down a little lower at 42 break even. So, you know, it's the way they sometimes are. Does this one come back up? Let's see. So right now it's doing kind of a 1 minute pullback. All right, so we have a high of about 68. It did sell off, but it came back up. And so this sort of becomes potentially the first 1 minute candle to make a new high. Orders at 70. Look at that volume right there. We're seeing that green. So I determined that the volume was light by looking at the total volume here, which is 466,000 shares of volume on the day. That's how I know that the total volume was light. So Hook says, how did you get filled at 43 if you had it set at 30? Well, let's go back and look at that. So are you looking at the sell order here? So I bought my order. Oh, so you know what, on this one? That's a good question. So how did I fill at the open? My guess would be that I used hotkeys. Yep, 3 hotkeys, shift 1, boom, 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 boom. 3 hotkeys for 2,500 shares. In this case, I'm not sure why I used hotkeys instead of this, but I used hotkeys on this one. So it pulls back. Now we're looking for the breakthrough 66. Hands on the buy button. I pressed that 3 times. Now I'm back in at 67. There's 74. I tried to add again. I'm exceeding my size. There's 87, 80 on the bid. Target is 4. I put an order out to take a little off the table here. Moment of truth. Is it going to come back to break even? 85. Can we get that break through the high? There we go, 85. I'm trying to get a little filled there. Orders at 84, filling. This ultimately ends up being kind of a small base hit. It's a little touch and go here. It's popping, but not as much as I want. There's 405. Goes right through that whole dollar with no problem at all. But now it's back below it. My average is 82. So now we would watch over 410, back over 4 and then 410. So watch here, possible trade, first 1 minute candle to make a new high. It actually is still not a 1 minute setup. So I added back at 96, there's 410. It needs to break 410 because what it needs to do is it needs to really break away from 4. If it's just at 407, 408, it's so close to 4 that it could come right back below it. So in this case, I get out at 404, 405, whatever it is, 407. But I'd consider getting back in over 410, 408, 49. If I start to see green, I'm back in. So now I'm seeing green, I'm back in. That's a case where I jumped out, I jumped back in. But now, in the moment I jumped out, it was a stock that was a bit extended and was looking kind of weak, and then I get back in. Now the thing is, it only went from 5 here, my average, to 12. So now, am I in too high? Doesn't feel like, this one feels like I'm struggling to get even 5 cents of profit on each of these trades. And now there's 4 and it breaks back below it. And then there's back to 13, back to 17. So, this is just a little bit of a tricky one. We would sort of start to call this a grinding stock because although it's moving higher, it keeps kind of, starting and then sort of fading, starting and then kind of fading again. And on this one, I don't know, I'm up 4,500. There's certainly times where you could say, well, why didn't you sell half? Let's see, where's the next trade? So these are small trades. So here where I got in at 05, I was trying to sell half at 10 because it wasn't really doing what I wanted. Then I got back in at 10. I'm trying to sell half at 13 because I'm only up 3 cents and it's already struggling. So I keep trying to get in and then get back out, but it's just that I'm not getting big trades on it. It's just a choppier one. And, sometimes they're like that. So next slide here, we've got, this is going to be the last one for this setup. Let's see. So copy link. Okay, so here we have SMIT, S-M-I-T, and it's 9:30. Oh no, sorry, it's 9:26. So we're getting ready for the bell to ring. SMIT is up 55%. It is easy to borrow. I cannot use margin. It shows 100%, which means I can only use my cash balance, which is about $119,000 times 4 is my buying power. But that's more than enough for me to take, 30,000 shares if I want to. So no problem there. All right, so about, still light volume, probably one of the leading gappers. We do, I presume, have news on it. Not sure, actually. So 90 seconds to the bell. Not sure what I was doing on that one. So let's see, we'll get a little closer here. All right, so 30 seconds to the bell. So SMIT, as you can see right there, was the leading gapper. And this was a more typical gap scan from a couple years ago. A lot of light volume stocks gapping up, 17, 20, 30%. This one's up 53%. So each day, this again just goes to show you, gosh, I don't know. This is 2018, years ago. This is years ago. Same strategy, same setup, same thing. We just, every single day we come in and we keep doing it. Yeah, are some markets hotter than others? Sure. But it'll slow down again at some point. And, so we just every day look at the leading gapper in the entire US market and look for that opportunity. So 363 is the current price. Looks like the high is about 370. We're looking like we're going to open right underneath the pre-market high. It's actually squeezing into the open. So I'm going to need to move my order up a little bit. So right here I come in, I move my order up to 95, hands on the buy button. Here's the open. There's some traders possibly buying right before the bell. Oh man, it looks like it's going to rip right at the open. Here we go. I'm adding at 90. I'm just pausing it here. There's $6. There's a 10,000, 11,000 share bid at 97. Probably someone trying to buy. There's 4. There I added. Now we've got 4. Now notice there, that looks like we have a little bit of a wall at 4. Doesn't it kind of look that way? 4, and then it dips down for a second. Now we see an order at 405. There we go, 408. I'm taking a little off the table. Realistically, I'm only in at 94. Now we're seeing some red. It needs to get back over 94. Sorry, 404, then 410. I'm taking a little off the table there. Added back at 405 for the break of 410. Selling half of it for a loss to reduce my risk. Not liking that it's dropping. Sometimes now we might be looking for that kind of red to green in a way where it now needs to pull back for a second and then rip back through the highs. It's not exactly red to green, but back over 4. So what I'm doing here is I'm unwinding the position for a smaller loss on the ask to reduce my risk. And then I'm happy to add back if it gets back over 405 and 410. Looks like it might do it right there, so I add back. Could I have just held the whole thing? Yeah, well, it could have. Could have also dropped down to 375. And right like this, I've given back half my gains on it, and I'm going to say this is a choppy stock. Maybe it's because it's easy to borrow. Maybe it's something else. I was up 1,000. Now I'm only up a little bit. So not super clean. This is an example where I got in, I pushed it a little bit too hard, and probably the 2 red flags on it. If we go back, first one was, well, it's lighter volume. The second is that it's easy to borrow. So short sellers are going to be potentially more aggressive. There's more of them out there. And then the second issue was as soon as the bell rang right at 4, we were already seeing some resistance. Where's this? So right here, as soon as we came to 4, we were already struggling. Couldn't break. So that's could be a short seller lined up. I mean, it broke, but then it got back below it, already showing us the struggle. Yeah, it's a tricky one. All right, so this has been a great class here. This has been Chapter 7, Setup 2, the break of the pre-market highs. Feel free to rewatch this class if it helps you get some of these, get this setup dialed in a little bit more. You'll see me trading it again and again. You can keep going into the live trading archives and watch examples of it. And we're going to continue on here with Setup 3, which is going to be our buying the break of the pre-market pivot, which is that level just below the pre-market high.